So, purchase of equipment went down because we use cash to do it. And then it'd be cash used by investing activities. So that's a negative 5640. Now, you guys, you notice on the other statements, the other three, we generally don't put brackets around the negative numbers. You have to put brackets around negative numbers here. Okay? So that's our second. What did investing do for us? Now, the financing activities do the same thing. Total them up, and you should get 3,600, which is also negative. So it's cash used by financing activities. And that's our third number. So we're going to now total this and get 16,920. This should kind of all be in one column. Just put extra space here. I'm sorry. So we total all three of these up, and we get 16,920, and it's positive, and that's 1 plus 2 plus 3. Now, here's the real check. Sorry, it's negative, you guys. Negative. I'm sure in your heads you were screaming at me. That's how I noticed. Okay. So, negative 16,920. If we add that to beginning cash, we should get 18,800. So, add those together. Do we get 18,800? Yes. So we're good. Okay, so cash flow is a really important statement, and it is definitely the one most students have trouble with. So make sure you do a lot of practice in this. You really have to know it cold because you're going to be looking at it for 316 again, and it's going to be the direct statement, which isn't like this at all, and you have to know both for your CPA. Get this one down pat. Now, I just want to talk a little bit about this statement results. Okay, how did they do in their operations? Bring in cash or lose cash? Well, they brought in cash. That's a good thing. Your operations, you want to bring cash in. Now, how about this investing activities? Is that bad? No. In order to work, you might have to buy capital equipment, right? Or you might invest in a new building or something like that. Okay? So this is cash out. And financing. This is how you pay for any of the investing and financing activities and any shortfalls in operations. Well, actually, it went out. So cash out. So think about why we did it. So up here for investing, purchase of equipment was good, right? Now, they had to issue common shares, so that increased the number of shareholders we had, or shares issued. They continued to pay a cash dividend, although you notice they couldn't pay the whole thing. They had to put it on dividends payable, which is going to put them a little bit behind next year if they want to give dividends again. Now, the repayment of notes payable, that was a large amount, relatively speaking. So it's hard to tell just from the information we have. We don't know if it was a mandatory repayment or if we were paid extra or anything like that, so you can't really tell. Okay, bottom line though, the net cash went down. So I'm just going to write down beside that. And you can actually add the word decrease here to make it clearer, and probably Wiley Plus will want it. But there you go. So just looking at this, they're doing okay in their operations, but they had to issue shares, pay for the equipment, and their cash dividends, we may get into a little trouble next year, and repayment of notes, if it was mandatory and not voluntary, then overall it could be rough. When you're looking at statements or ratios, what do you consider? Can you just look at this number and go, oh yeah, 16,920 going down, yeah, that's good? No. You have to compare your performance to last year, years, and industry standards. For example, let's say this was the pandemic. Oh, and it was. Oh, are we in 21 or 20? Good Lord, I don't even know what year it is, let alone the day. Okay, and it's not because I'm getting old. I'm blaming it on the pandemic. Okay, so let's say last year you came out with a positive cash increase of like, I don't know, 100,000. The only reason though is because you took out a huge loan. Is that good or bad compared to this year? Well, when you're comparing to last year's, you always have to ask why. Okay, why? So, looking at this, if you had to get all this funding just to stay positive, and let's say you purchased equipment or a building or something, maybe that's an okay thing. Okay? But what if you looked at someone else in your industry, or the ratios for people in businesses in your industry, and all of them had much, much higher numbers here. They were positive, and their operating activities were much higher, relatively speaking. Worry, right? If you slowly had operating activities decreasing over time, and these had to keep it increasing, like being more negative, then you're getting in a worse and worse position. So that's kind of how you'd read it. I hope that made sense, you guys. I know this statement's tricky, but luckily you've done it before. Okay, so the last thing I want to do, even though you do not need to know the direct method, remember this is indirect. So even though you're not going to have to learn the direct, I did give you on page 10 a summary of how to do it. It's not testable. Remember, only the operating section is what differs. And the biggest reason IFRS recommends this is looking at page 10. Okay? So this would be the only thing that's different for direct. Is it easy for you to make sense of this? Well, we have an income, but our increase in A we're going to subtract, and increase in inventory we're going to subtract, but prepaid expenses went down, so we're going to add. Does that really make sense to an investor compared to something like this? Because this is how the direct statement is. your first section, and this is just operating. So this is all operating. Cash receipts from customers. Cash receipts from other revenue sources. Cash payments to suppliers for goods and services. Cash payments to employees. Cash payments from interest and dividends that belong in the operating activities. And cash payments of income tax. Right? That makes a heck of a lot more sense, even to us that know accounting. Increase in inventory, like explain why an increase in inventory is subtracted from net income. So I'll tell you now since I asked you to think about it. Inventory, that means you not only bought enough for cost of goods sold, but have a surplus of $940. So it's like you're stockpiling it. So that's why we increase it, because cost of goods sold, which is on the income statement, doesn't tell us enough about how much we actually shelled out in inventory. That's why. So that makes much less sense than cash payments to suppliers for goods and services. Okay? Anyway, you guys can look at that. Nice to keep handy for 316. And I'll just pop on to the last. It is not testable. Don't panic. And if I inadvertently assigned you an indirect or a direct method, just ignore it. Or if it's an actual assignment, let me know, and I'll take it out. Okay, last page. These are just some useful ratios. Again, you learned these last year. Working capital used to calculate short-term liquidity. In the short term, if they had to, how much money could they get? So it's just current assets minus current liabilities. Free cash flow means discretionary cash flow. You can make additional investments, retire debt, add to its liquidity. So net cash from operations minus capital expenditures plus dividends. Now, Appendix 5A includes many other ratios. You don't have to memorize them, and of course you do have open book this year. We will cover select ratios in future chapters, but be aware financial statements are used in a variety of ways. So not too much emphasis on this, but you can go through and look at it. Now, at the end of this chapter, there's IFRS and ASPE comparison at the end. The major differences are going to be covered in our next financial accounting course. For now, just be aware that some differences do exist. Okay, let's see if there was anything I need to tell you other than that. Okay, I think that's all then. I hope it makes sense. Try doing the question from the notes first. Then, once you've got that mastered, you can go to the book and start working through the suggested problems. Again, only do your assignment once you've done some problems, like at least 2 for whichever statement. Okay, take care, and I will see you in Chapter 6.